Good afternoon, everybody. Welcome to TraderMerlin show. A little bit late with my intro there. Sorry about that one. It is your Tuesday edition, the first of two shows for the week. No, I will be doing a show tomorrow, which I almost thought I wouldn't. I'll do a show tomorrow, and then I'm off until the 13th of September, and we'll be traveling to Jamaica, so I'll be down. I don't think I will be doing a show from there. I actually thought about it, but I'm bringing my laptop, which is hard to broadcast from, so unfortunately, no shows for you guys for 7 days. I'm sure. Okay, so let's just dive right into the topic du jour for today, which was a buying day. I received about 3 messages today from people asking me if today was a buying day. And it's like, how the hell do I know? You guys got to figure out what a buying opportunity is for you, what your time frame duration is, etc. So I would look at some of these major market indexes, start from the top, do our top 7, then I'll run through the specific S&P sector ETFs to see if buying opportunities there. On some of them, I did sell some puts today, and I'll tell you those positions go through today's show. But yeah, let me start with that, and we'll go from the bottom to the top. Obviously, Russell 2000, big down day, 2.09% for my position. This obviously was a very good thing. I'd have recalled from last week. I had opened some positions on Thursday based off this shooting star. Then it ripped up the next day, but came up into my overhead area of supply, which is my backstop. And I shorted some more in that level. So at this point, I have 80 puts on Russell expiring in November. And, you know, for me, the stop loss on this thing was 1945. So if it rallied up there, I'd get out. The way it transpired today, great. You know, obviously a 2% down day with that many options contracts is a pretty good gain for the account, but it's nothing because it's not done. It's not closed out. We'll wait and see. Now, I do think you're going to end up seeing this drift lower. I think you get a little bit lower on this one. I actually sold some puts today at 1865. Well, right around that. It was 185 on the IWM ETF, just as a point where I would be okay buying some. I don't think that this is a monster correction. I just think it's a pullback in that bigger trend. Hopefully we'll get down to 185. My long puts will be doing great, and my short puts will be doing money on both sides. Love it. Well, withdrawal symptoms have been gone for a while. Maybe a little. I think it'd be fine. It's funny. I should just give you guys permission and access to my stream, and then you guys could actually host the show. I'm gone. Good one, John. I like that. Jim making me crazy. All right. So Russell was your biggest one to the downside, and you know, if you're asking the question, is it a buying day? You've got to figure out what your plan is. You know, I can't say it's a buying day or not. Each individual person is going to have a specific look at this. Now, what I love about the way the Russell closed today, closed like dead lows. I mean, great the way this one finished. Now, if we look out a little bit further, you know, what can we say about the Russell? Not much other than that yellow box we've had literally for over a year now has been respected. It keeps traversing back and forth. So I'll just keep moving this out. So, you know, do I think it's going to have a monster move? No, I don't. I do think it could drift a little bit lower. Like I said, that 1860, I did the 1865 puts just because I'd be fine owning some Russell longer term. But all in all, I don't expect this to be a monster thing. Now, if we do get down below on the Russell, you notice that there is what some might view as to be a head and shoulders pattern. I'll draw some lines on here just to kind of look here, right across those bottoms. You could make the argument that we are seeing drawing it out here. I know the podcaster's like, why isn't he talking? It's there. You can head and shoulders start to form. I know some of you have asked me about this one as well. That's where we're at right now. If we do get something like this and ends up breaking these lows that you see right around, let's call it 1833, then I think that there could be some problems. Is there some audio problems, Liz? There shouldn't be any audio problems. I think I fixed all that the other day. Hope not. hope it's just you. Otherwise, that means I got to figure out what to do with the dang computer. So, you know, I don't know necessarily if we're going to get back down to that level of 1833 on the Russell 2000. So, drop it intermittently. Come on. Oh, unfortunately, I'm going to have to find some way to fix that, if that is in fact the case, because nothing has changed here from a technical perspective on my end. So, Okay. I'll do my best to figure that out. I don't know what that might be. I actually was looking at buying a new microphone. All right. Some people say no problem. 3 of you saying you got issues. All right. Well, I'm not going to fix that before I go on vacation, but I will definitely look into that. Anyway, starting with that Russell, if it's a buying opportunity, I've got to know where my stop loss is and where my ultimate line in the sand is, where I say enough is enough, right? So as you guys know, I am short the Russell 2000, long 80 puts. Okay, fine. Well, the question now is, where does it end up dropping to if it does continue on here? If it does get down to this 1833 mark on the futures, I most likely am going to lighten my position quite a bit. Problem that you had last week. I'll listen to the recording after this one. Usually we get fluctuations when I turn my head like that to the side or something like that. Right now I'm actually facing straight out. Trying to get it. All right, so Russell 2000 is a buying opportunity. I wouldn't say it's a buying opportunity right now. It really depends on your level and what your expectations are, right? So if I was not in a position right now, I would wait to look to buy at a deeper discount, at a deeper drop, maybe around that 1833 mark. As I mentioned today, I did sell some puts today at the 185 mark for IWM, which I'll bring here. And that's just because I'm okay owning IWM long and where. Thanks, Big F. Appreciate that. We'll just take it out of some of the trades we've been making. So you guys can see kind of why I chose that. It's the area where it's consolidated for. There was about a week of kind of chop back and forth between August 18th and August 25th. So I'm using that as kind of the backstop here. But if we get any lower than, let's say, 181 on the Russell, then I could start to feel pain on that put position that I've sold the puts on. My long puts, I'll still do fine. I expect actually this to continue on. It feels like this is kind of the shock factor. I guess the big question that I'd ask all of you is, why was it just the Russell? And that was a question that came here from Scott. Scott says, why such a big drop in the Russell today? Well, keep in mind, it had that huge jump on Friday's session. So it was the outlier on Friday to the upside, and today it's just the outlier to the downside. And who knows whether that's zero DTE expirations or people pumping it up by buying heavily zero DTE. But that was something I read out there was, oh, well, it's zero dated expirations. There was a huge surge on call volume, which drove the price up. Okay. But again, it was speculation. It was different than what we saw from the other indexes. So if this is the IWM, and you can see Friday, which is the second to last candle, was a big jump up, and then today gave it all back. Look at the QQQs. QQQs had a slight jump up, but end of the day down, whereas the Russell was the big gainer on Friday's session. So we're seeing a little bit of a flip-flop here. I think it's just the risk on, for whatever reason, people piled in too long on the Russell on Friday, and now they're jumping out of it on your Monday session. Tuesday session. That's the basics there. IWM is what we're looking at that one. Moving up our list here. Next in line, gold. I did sell some puts on SLV today. So I did a, $50 to send you a new mic. The mic I got, I think it'd be about $150. So it's the Yeti Blue Pro. It's the one I've been using for years, and I actually like this thing. Great, but I know that Larry actually has them at the office too, and it started having some mic issues. So I'll probably order one tonight. When I come back next week, I'll plug that in, and you guys let me know. Thanks for letting me know. So yeah, I did sell SLV today. I actually sold, I know we're looking at GLD, but let me just talk about silver real quick. So on SLV, I sold the 2150s, and you guys can see again why. I was going to go the 21s, but that's a bit further down, and the premium just wasn't there. These options that I sold were for September 15th, so just week and a half away. The premium, I think, was a little over 0.5% for the next 2 weeks. So I was okay with that, owning silver long at 2150. I think it's had a pretty big slide from almost $23 last 4 trading sessions. So I was actually okay owning silver long. I did sell the 2150 put options expiring on the month. Those are the 2 of the trades I made today, IWM and SLV. Okay, as far as gold goes, somebody's asking if it's a buying opportunity. Well, I don't think so. Again, I look at gold as kind of having compression in price. If you look at where we were back here in May of this year, we had much higher highs, right? We were hitting highs right around 2,085. Well, we came back down, made our lows right around about 1,900. We bounced, but the bounce wasn't anywhere near as high. Then it came back down that same low, we double bottomed, and now we bounce back up, but there's really no momentum. So it feels like this is going to just start to form a big descending triangle on gold. Even though I'm long-term bullish, try to take a peek at this basic trend line here. I know it's not perfectly drawn, but it's just to give you the idea of where I see gold going in the short term. Now, we could do this in a couple of ways. I could put it to the lows right here, or I could slide it all the way down to the base. I'm going to put it right at the base of this long candle just to give myself a bit of quick cushion. But anyway, that's what your chart ends up looking like, is really a descending triangle, which is not that great of a sign. So I was a bit aggressive because I'm a long-term position holder who's going to sell calls against my silver if I get it. Overall, gold being down 0.74% today doesn't look that great. Still. John says, blow the dust out of it. I'll get some compressed air, but maybe I think it might actually be my computer. S&P 500, which I also have puts on, down 0.42% on the day. Barely rolling over, but you guys notice what it did today, right? We have these lines on our screen. I'll get rid of that one at the top. There's one horizontal red line on your screen, which is at 45.07. And the point of the analysis we did on Friday was saying, look, if you get below 45.07 on the shooting star that's on the S&P, there's your shorting opportunity. And today you got that. Close at 45.02. So technically, if you went short below 45.07, you're only up maybe 4 or 5 points. So it's not like a big day or anything. But the question is this kind of the beginning of a bigger down move? It does feel that way. It feels like there's just this want for a retracement in our markets. Therefore, I think that S&P. Now, one that wasn't down today from our top 3 indexes was the NASDAQ, which had a shooting star formation yesterday. I will leave that comment alone. Not touching that one, Steve. That one's too hot to handle. Look at the NASDAQ 100 futures. It's a really interesting chart. You've had 3 consecutive days that this market has done literally nothing, right? Yes, you've had some swings, but notice the real bodies. And for those that don't know what a real body is, the real body is the difference between where it opened and where it closed. And we've literally just gone sideways for the past 3 trading sessions. I've done nothing, almost no gains whatsoever. But you've had topping tails, bottoming tails. So volatility is there during the day, but ultimately traders can't make up their mind about which way to go. Now, obviously, if we expect or want this market to roll over, we need to get a close below 15,460. Got to close below it. Now, today we broke below it, but we didn't close below it. Big determining factor in the. So, all in all, we look at the indexes. Russell, monster engulfing pattern, looking fairly bearish. The S&P slowly rolling over, just triggering kind of a short signal for anybody who's a technical trader. The NASDAQ still holding. So I need the NASDAQ to roll over, and that will bring the S&P and the Russell down with it. We'll wait and see what happens this week. I have a feeling I'll have some big positions open as I go on vacation. Always fun to have big positions open on vacation. Here is your 10-year. Now for the day, there's Friday's big up day. Monday, nothing. Then you had this gap up into the new session right now because bond market was closed. So now all of a sudden you're seeing a pretty big jump here to 2.462%. As you look at this, it becomes fairly clear that 3.35% line we've had drawn for months before it actually hit it is going to come back into play. Right? I actually had anticipated this dropping further and getting the yield down to around 4%. Didn't happen. All of a sudden we see that spike up. And maybe this has to do with what Bill Addis was talking about the other day, which is that massive amount of selling of bonds from the Treasury. Flood the market with bonds, you got to pay higher yield. A little more pessimism about the markets going forward. So there we go. Big jump up today, even though you don't really get much of a trading opportunity because these are just hashes, meaning one little line, because that's because. All right, our top 3, podium time, Bitcoin. Nothing to say here with Bitcoin other than, man, what an about face from great news to just wah wah. Right now trading at 25,735, but the candle is a bullish harami. No, you won't believe that, but when you have a candle that fits pretty much entirely within the real body of the previous day after an sell-off, bullish harami, even if the day itself, technically we'd want this last candle today to be green for this harami, still does qualify based off the structure of. All right, dollar index. Hallelujah. Ripping. All right, dollar was up 0.59% today. 104.77 is where it's at. We have that line drawn on your screen, which is 104.74. We're above that right now. Now, of course, nothing is precise. It's really more about a zone with regards to price action. But you notice that we've breached these highs from back in May of this year, and now it looks like we are going to be challenging some of these previous highs, right around 105, 105.65 would be my next logical point. And because we broke that, I have to finally delete this entire head and shoulders pattern. Because in my book, just the way I do technical analysis, it's over. It could not make a new high, meaning the right shoulder had been violated. Therefore, that one is now officially gone. Now we just have some horizontal lines on there, and we're back to just trying to figure out the trend and figure out which way this goes. Now, if this does in fact continue to trend up here, then the put position talked about earlier from Lisa is going to do fairly well, and so will my Russell. I will probably continue to hold it. If this dollar surges and ends up breaking these highs we see back here, which again, we'll call it 106, oh man, that's going to be great for bearish activity in the marketplace. So keep your eye on the dollar index. I think that's a major driver of where we're going. If this dollar continues to surge, and if this 10-year continues to surge, then I would expect your Russell, your S&P, and your NASDAQ to all have pretty good pullbacks. Not crashes, but just pullbacks. Will the parents start chasing the kids per Chuck Wilkinson? Yeah, exactly. Now you got the broader market indexes. Ultimately, they'll all flow together, but once daddy rolls over, which the daddy is the S&P, the NASDAQ is just so tech heavy, it's driving these markets. Driving the market. John says, kind of looks like they will all go in the same direction soon, a day or two. That's what I think, John. That's where my thought is right now. This is just a holdout, right? NASDAQ has not rolled over yet. So let's look at one we don't normally look at. So there's your NASDAQ, which is the strongest of the bunch. S&P is still holding fairly well, although in my book, it did trigger some weak points here. I know some of you may look at this next level right here, which is the low from the candle on August 30th, and say, okay, well, I'm now looking at 4,496. That's the next stopping point. Once that one's breached, you don't have anything unless you break these candles up into a 4-hour or an hourly chart. So yeah, your next backstop is pretty darn close. You've got about 6 points to get to that next level on the S&P. I don't think it's going to hold. I think it's going to go further to the south side. Yeah, we like Chuck. Guy. All right, and one we don't normally look at, the Dow. So here's your Dow is already kind of rolled over and looks like it's coming back. So really the only holdout here is that NASDAQ. And a little bit of follow through from the NASDAQ to the downside will cause the S&P to drift a little bit more, and then we'll see more faster moves to the south. Pretty good. I'm liking it. Like my positions as I have them right now. Now I got one other position that let's get to the top one here. Here is the bad boy, crude oil, light crude oil futures. The CL with a big spinning top formation, long topping tail, and after a big up move like that, one of the things I like to look for is volume, because this move doesn't necessarily mean it's emotional. It certainly tells you that people are just buying it up, but is there emotion in it? So I always like to add on volume, and now you can see that there is in fact emotion here. And the only reason I say that there's emotion is because increasing volume tells you that there's more interest and excitement for it. Now, it's not climactic volume by any stretch. It's actually in line with kind of some of the peaks that we've seen over the past couple of years on this. So it's not that great. But you do have accelerated volume. I would love to have seen a much higher spike of volume today on crude oil as we came into this formation. But there was a question that came in, which was from Kevin. Kevin says, how about that shooting star on energy today? So it's funny because when I got that email, I was like, what? I don't see a shooting star on crude oil. But I think what you're referencing there, Kevin, is XLE. So we'll start our run through of your ETFs here. And volume off of there. There you go. So here's energy. Notice the volume surge today. So you've got a shooting star. You've got volume that I would argue is significantly higher than what we've seen certainly over the past couple of weeks. So this is a great opportunity tomorrow to potentially short energy. Now, how would you do it? Well, again, my rules are very simple. I'm not trying to complicate things. You've got this red line that I just drew on your screen at 91.16. Now, we're currently down below that. But tomorrow, let's say we open up above 91.16. If we open up above that and then break down below it, there's your shorting opportunity. You can see here on XLE. Thank you. Did it again, Lisa. Thank you. I'll wait for it to come over and then I'll start chatting again. That lengthy delay I have here with my YouTube stream drives me crazy. Yep. It's coming. It should be there. Man, that's how long the delay is. It just got there. There you go. So there's the red line. You can see, and thank you for typing in there, Lisa. It takes, I think it's about 30-second delay. I could make it shorter, but what happens is it'll suffer, you guys will suffer on the back end with a lot of gaps. From what I was reading, if you do the show with no delay, there's sometimes huge lag times on your end and skipping. I was like, I'd rather not have that. So that's why I have the delay. That's not to censor myself, obviously, as you guys know. I'm not censoring it here. Anyway, back to the chart. Now that you can all see it, as I have confirmation from my preview screen over here, there's your shooting star. And again, the volume is what I'm focusing on in conjunction. The shooting star by itself is beautiful. I mean, it does not get much better than that. It's called a gravestone doji. Gravestone doji is where it opens and closes right at the same price, usually at the dead low of the candle, and a long topping tail here. So this looks great for energy for a short tomorrow. Unfortunately, I'm going to be running around doing a lot of stuff, getting ready for my trip and finalizing some stuff I got to take care of. But if I have one trade set up for tomorrow, I'm going to be looking at XLE. I'll be looking to short XLE here if it does meet my conditions and criteria. So keep your eye on that one. I love the high volume. And again, it's not climactic volume. It's just higher than normal volume. After a run like this, XLE is at a pretty significant rip. Going to the lows that we saw back on August 23rd to our high today, that's 7% in 8 days. That's pretty significant. And of course, a lot of that coming on the heels of oil, which in that same window of time has run from there to there, 13.5%. So any little correction here on crude oil is going to bring down energy with it, and I think that there might be some good shorting opportunity on it. I like it, Kevin. I love that shooting star in XLE. More importantly, I love the volume that's associated with it. So I think you guys have a recipe there for a pretty nice trade setup for it. Now, to go back to the original discussion about was this a buying opportunity? Again, it really depends on what is your plan, right? With my silver, my plan is I'll buy silver. I'm happy to buy silver lower, right? I'll sell some puts again. I'll sell some puts. If I get executed the shares, great. I'll sell calls against it. That's part of my strategy. If you're in it to make a quick buck and you're looking shorter term, I don't know if this is necessarily a buying opportunity. I might actually be thinking more of a shorting opportunity in the short term, meaning the next couple of days. Maybe, again, it could always change. Where would you get out if it goes down? On XLE, a couple different spots here. So I'd really want to see what the momentum looked like. And again, I'd have to determine what my trade time frame was. But for me, I like these two horizontal red lines I'm putting in here if I'm looking short term. And that's just because that's where you have gaps. And I think that gaps act as a magnet to price. I am sharing my screen here. That gap being 89.19, 89.90, which doesn't leave a ton of meat on the bone, but leveraged properly. And with this one, I'll probably be using options on that one as well, so I get the benefit of leverage. Catching a full point on XLE or 1.5. So those would be my two targets. And again, I would wait and see what happens with the overall market. This position I'm in right now with the Russell and the S&P, for example, I have targets in mind, but if I feel like momentum is still moving down, then I'll leave it open and let it run. If I'm iffy and things feel like they're going to bounce back to the upside, I'll just take my money and run, or maybe close half my position. But I evaluate as things are in motion. One of the challenges that I've faced, and I'm sure many of you have over the years, has been I'm in a trade, it's my target, I close it out, and then I would have made 5 times, 10 times as much if I just left. Oh, that thing that bugs us all. A lot of times you kind of feel like it's going to keep running. If it does, I actually may leave the entire thing open, but lately I've been just kind of taking half off the table because I'm risk averse. All right, so let's go look at these other potential buying opportunities. Right? If we look at the index ETF, that's what I'm going to focus on here. These, I think there's 11 of them. Now let's look at XLB. This is your materials. If I take a step back and look at the bigger picture, there's been a lot of chop on building materials. It's gone from lows of right around $75 to highs around 86, and here we are now at 82. Well, today's candle was certainly brutal. The question is, where would I want to be a buyer on it? I don't think buying right now would be appropriate on XLB, so what would I do? Well, I would probably find a level where I'd be interested, which for me would be right in the middle of this base. So I might go out and sell if I could get good enough premium, or let's say the 15th. I would check the 15th. I might actually check the weeklies as well. So I would look at the 81s and see what that premium would give me on that specific trade for 2 weeks. If it was acceptable to me, I might make that trade. I think building materials are probably gonna have another couple down days, but I think they'll stall out around this base area. Now, of course, if I see it break down below, let's say $80, I might have to put some stop losses in and exit that trade. But all in all, I don't think you're going to see that dramatic of a move. This is the biggest red candle on the screen since March of this year, where it was very aggressive down. So I would say, sure, I'm okay to buy XLB, but not at these current levels, at lower levels. Tom says, do you ever use trailing stops on those potential runners? On the underlier, I will. So what I'll do is I just track the underlier, right? And it's difficult when you're in an options trade because I've got the options on is typically how I'm playing that. But if I see the underlier go below a certain point, then I'll just dump it. But I have to do that manually. There's no automated piece for me to say. I can set an alert to say, alert me when it hits a trailing stop of X percentage or price point. Then I can go to the option and stuff. You don't want to especially when you feel like you're in a nice option trade, you don't want to get out of it. It's like, oh, I don't want to get out. Well, sometimes I feel like you have to. All right, so that was XLB. Let's look at XLI. Here's your industrials. And I would argue this is a very similar picture, although, the volume, even though it's up over the past 3 days, to have a candle this big on industrials and that low volume, it actually makes me feel like this is going to turn. This is just caught up in the sympathy of the markets where people backed away and just weren't buying. It's not that there was that much selling pressure. It's just that buyers are going, hold on a second, markets are tanking. I'm not going to buy anything right now. So I would feel the same way about this one. I'd go look and see maybe the 106, somewhere in the middle of this area of chop that it had back over the ago. I might look at the 106 and see what that premium would give me for either this week or next week. Next one, XLU. Okay, XLU is different. So I sold puts today on XLU. So first off, you can see the volume on this bad boy much higher today. Can't get this chart off the volume. So let me put the cursor over there. Today's volume was 18.8 million. Now you go back just about a week ago, it was 8 million. So it's significantly higher today. Climactic volume on aggressive sell-off. And here's what it takes volume out of there. So you're coming screaming down into this low point that we saw from back in October of last year. Now it is very bearish because you're making lower highs, lower highs, lower highs, and now we're coming back down to existing low. I sold the 61s. I was going to try to go lower, but the premium just wasn't worth it for me. So I was like, all right, I'll do the 61s on XLU. And, the premium was decent. Nothing fantastic. But for, 2 weeks, getting, I think it was close to 0.75% or more. I don't have my list of prices here in front of me. But did sell XLU puts today based off of big volume spike, climactic volume into this lower point here. I'm okay owning that. So there's one that I'm okay to own long term. I think utilities long term, are going to be fine, even though I don't like the weakness we've seen over the past, let's say, 8 months to a year. Has been pretty weak, making lower highs. That's not great. But all in all, you get a nice uptrend from utilities over time. We're going to pay more for electricity. We're going to pay more for water. We're going to pay more for gas. That's just the nature of it. Profit margins there continue. Utilities, I'm good. Real estate. Even though we had a drop of 1.24%, I still am shying away from real estate just because I feel bearish on this segment overall. Look at this chart. I think it's beautiful. You've got a great downtrend, but one thing to keep in mind for anybody who's bullish on real estate or bearish on it is we've started to stabilize at least the lows across the bottom here. We're making higher lows and lower highs. So what you have is compression of price. This is a very loose triangle. Yeah. But bottom line is it's respecting this. It's lower highs, higher lows, which is compression. Typically, that means downside movement when it breaks. Hey, Brandon, thank you very much for that contribution. I appreciate it. Is this a leading indicator to what the PMI will be tomorrow? Factory order? No, not necessarily. I think that there's a little bit of a correlation, but I don't hang my hat on those into the factory order. Definitely don't. Or PMI. I'm just looking to see if it's beating the trends or not. And we'll bring up the data here in just a minute. So IYR, I wouldn't touch it. I don't see any real, even though it's down 1.24% today, I think it's still a little bit risky. Could you go out there and try to sell maybe the 82 puts? Sure. Collect a little bit of premium. Again, all of these are going to have to meet the test of, is it enough premium for the next week or two, whichever time frame you decide to sell those options. I actually started to look for going to the October 20th options. Like maybe that would be the one, but I just don't want to commit that much time at this point, especially if I'm looking at selling puts. Because if in fact we do get those statistics that I talked about last week, which was numbers usually a negative month, the down day, down month, it's like 4% down month. So if we have a September and an October that's negative, I don't want to sell that much time. Didn't want to do that. That's why I'm sticking with either this week or next week, give myself maximum 2 weeks on these options. And it's just a risk management technique. I know what you're going to tell me is there's not enough premium there, Merlin. That's okay. For me, I will take less premium right now, knowing I'm not giving up that much time in a period of time where the markets are historically bearish. Because by selling puts, I'm saying I'm going to buy it. I don't want it to get away from me. All right, what else we got? Healthcare. Now, I don't touch healthcare, even though some of you might look at this right now and think it's an absolute buy at this exact moment, right? You could put a yellow box, get that bar box on here. There's your yellow box. I mean, you're right at the dead bottom of this one. So could you sell puts right now at 132 and collect some pretty damn good premium? Yeah, you probably could. But the way that it fell today and knowing that the overall market is looking a little bit weaker, I wouldn't sell at the money right now. A little too risky for me, even though the premium is going to be a lot better. So nope, not interested in healthcare. As you guys know, I don't touch healthcare. Anyway, financials. This thing looks so different than all the other charts we've looked at. Very different looking chart. Not interested personally. You look at what's gone on with financials. It had a great rally from those lows back in March, right after the old banking scandal and garbage that whole thing was. Looking good, but now I'm hearing more and more thoughts, concerns about issues with the financial firms and that there might be some other shoes to drop here. Personally, don't think we're more shoes drop in that arena, but what a lot of the big time analysts are saying, so I'll let them have their day in the sun. So nope, not interested in XLF. SPY, we already looked at the indexes. XLY, consumer discretionary. Well, still a great looking chart, better than most because it's been making higher highs and higher lows. This right now might be a potential pullback point. On a day when the entire markets are, well, most of the markets are down, XLY was up 0.07%. So if I am interested, I wouldn't be selling any puts today just because I want the down day, I want the fear, I want the panic, I want running for the exits. But 165, I may be okay buying XLY at, but I wouldn't be doing it today. And the same thing goes for XLE. We already talked about energy. With energy, I wouldn't be selling puts personally. I'd be buying puts. I want to leverage on the shooting star, the volume surge, and if I can get a nice pop down tomorrow, just a couple of bucks, going directionally with the options is going to be better than selling put. So to go back to that initial question, which was questions, which is about is a buying day. I think every day is a buying day. There's always something to buy. There's always something to sell. It's just what fits you. Now, the stuff I just analyzed, keep in mind, that's just my perspective. I am sure that some of you are looking at it going, I wouldn't do that. Great. That's awesome. That's the way it should be. You know, I don't think everybody's going to have the same opinions, the same perspectives, but just showing you what I'm looking at and kind of maybe that helps some of you do kind of how I look at things. I try to keep it very quick, very simple. Again, I've got two factors that are changing my opinion for the next couple months. Number one is I'm going on vacation. I'd rather not have too much on. Typically when I go on vacation, I like to have no positions open, but given the way that Russell's moving, I'm probably going to leave that thing open for while I'm there in Jamaica. So I don't like to have positions open while I'm on vacation. The other part here is just the statistics about how bad September and October historically are. I'm positioning myself for that. So it's going to be a vacation where I do think about my positions a little bit, but that's what it is. What else did I have? Energy on Shooting Star. We got the Russell. What else did I have? Big Tom says, I think healthcare and pharmaceutical should be viewed very differently. Healthcare is very expensive subscription business model. Pharma is a lotto play. I agree. Healthcare, especially when you're looking at hospitals and things like that, I'm fine with. When I'm looking at things that are like a very diversified pharmaceutical company called an Eli Lilly or Bristol Myers or about Johnson Pharmaceutical, but categories. I'm okay with diversified companies, but I've been burned so many times. I certainly am not going, as Tom says, into a pharma where it's one drug stock. Healthcare, one of those ones that I don't see anything that's going to end up causing our healthcare costs to decline. It feels like it's getting more and more expensive. In the long run, you kind of got to be bullish on healthcare. It's just part of the reason I dance around that one, Tom, is this. In the analysis of my trades and the history of my trading, I haven't done well with healthcare stuff. I haven't done well with pharmaceuticals. So I've taken that whole segment, lumped it together, opened up my giant 55-gallon Rubbermaid garbage container, and I throw them in there, and I just, I don't care. If I look at this chart of healthcare, this diverse ETF has a lot of different healthcare. And for those who might want to know, let me real quickly bring a bar chart for you. Some of the components. Bar chart, great site for finding the components out there. So let's go here, XLV, just so you can see some of the names. Some are pharma and some are healthcare. It's different in these. But let's go down to the bottom and click on constituents. And right away, United Health Group, probably fine. There's your Johnson & Johnson, Merck, AbbVie. You know, these are okay companies. They're very well diversified. The little tiny pharmaceutical stuff that I just stay away from. There's a lot of different factors in this one. Probably all going to do well over time. If I am going to buy anything with healthcare, though, just because it's me and the way that I've been hurt by healthcare and pharma, I am sticking with XLV. Most liquid, it's the most diverse that I want to look at. So at this point, I don't see any reason for me to need to buy it unless I'm taking that gamble that this demand zone is going to hold right now. But keep in mind, this is the third time we've hit it. Come down once, twice, 3 times. Not feeling that. Let's see. Commercial real estate problems going to hurt the banks? Yeah. We've talked about that a while back, and I'd like to get some bankers on. I've actually a couple of friends of mine who are kind of in that banking space or in the commercial real estate space, and they don't want to come on names or talk about them. Oh man, I'll put a voice changer so you could sit here and talk about it. No, I don't want to talk about it. They are bullish because they're in the industry, but you pry them a little bit and like, yeah, there might be some problems ahead. If they say that, then I think there's probably some more. This is that piece that I think leads to banks having some issues. We talked about different banks having large exposure to loans, particularly a lot of regional banks, and that may be the next. Big Eb says Lilly, United Healthcare are 2 very different charts this year. I would take United Healthcare. Well, I have not looked at the charts, but as a business, I'd take United Healthcare over Eli Lilly. Eli Lilly, of course, I would be losing. I was hoping I would be right on that one, John or Big Eb. So here you got 558 for Eli Lilly. Man, wow. Look what drugs they're into, because that's the deal you want to be holding on to. This looks like a chart of NVIDIA. Then UNH. Yep, very different. Wow. So longer term, I want hospitals. I want that type of stuff. Although drugs, never going to go wrong with a drug. Well, as long as you keep that monopoly. And I don't know what drug Eli Lilly is making all that killing on, but they're obviously doing great. Yeah, but very, very different charts. But also business models, right? Very different. Yes, I know Eli Lilly. It's funny. It's one of the first things I ever did when I worked for a financial planning firm. Funny, it's like the Wizard of Oz. You got the guy behind the curtain. So my boss sit down with the clients and would talk to all them and basically get all their financial statements. And one customer had was an executive at Eli Lilly. And when I got all these documents, I put them in spreadsheets. It was like 600,000 shares of Eli. Of course, nothing else. Everything was Eli Lilly stock. And I remember I didn't even know what Eli Lilly was. This is back in 1998. I'm like, my recommendation, get out of some of your Eli Lilly. You can't have 600,000 shares of Eli Lilly, and that's your holding. You need to diversify some of this stuff. That's, what would that look like? Let's go back here to monthly. That was 1998. So let me go on a monthly here. Man, didn't take my advice and sell some of their Eli Lilly. That was back. Oh, that Eli Lilly was trading around $6. And they had 600,000 shares of it. Crazy. A lot of money. Lee says Lil is rocking due to diabetic drug. Right? Nice. You're using a drug to lose weight. Oh, okay. I would agree. UNH and Eli 2 very different companies. UNH isn't a drug. Yeah, it's hospitals and biggest in the ETF. Biggest item in employee compensation package. I see you're approaching 20K doctors. Yeah, and I don't put too much emphasis on this one, but you're right. They are. It's funny. Eli Lilly and United Health Group are right around 9%. 8+%. Johnson & Johnson is almost 8%. These three are your main leaders in that. I didn't count the exact number in here, but it looks like there's probably about 30 or 40 different components in this. Yeah, not a recommendation to buy any one of them. It's all about researching and figure out which one you want to hold long term. Most of the trades I'm making are just based off the charts, and XLV shouldn't be any different, but I have this psychological bias to XL healthcare, not the actual healthcare, but companies. Chart is UNH, not LO. What? This is UNH. Right, on the, oh, thank you. Yeah, man, I'm losing it. You would think I partied hard all weekend, Lisa. This is even better. Go back to 98. Not that much better. So it's 10x. Thank you, Lisa. So in 98, it was probably back in here. Yeah, back in February, March, April is when I would think I was at $64, and now it's at 558. Thank you for the correction. I'm breaking up again. Show's just going to hell in a handbasket. I don't know what to do about it. And nothing's been changed. I haven't touched anything, haven't dialed anything. It's a long weekend. Yeah, no, well, it was a long weekend, but I really had a nice, mellow, calm weekend. Didn't do it. All right, let me go into your economic calendar, what we can talk about for tomorrow. Obviously, we are on Tuesday. Some of the data that came out today, factory orders. I think that was brought up by someone was here talking about the factory order. The impact was what it looks like. You can see for the U.S., you had factory orders were expected to be a contraction of 2.5%. Came out a contraction of 2.1%, which is better than expected. Now, I know it looks bad. It looks bad because you have this big down candle or bar on this bar chart, but was better than expectations. So you would have thought that might have actually been a little bit good for the markets because it wasn't as bad as expected. But it still is a contraction in factory orders. Now, the other part of the comment that was made was, do you think that's going to have an impact on the data tomorrow? Well, as you can see here, you've got ISM services PMI. You also have a couple FOMC members, but you have two service numbers coming out. You have ISM services PMI and the final services PMI. Most eyes are on the ISM services PMI. Here is your chart of that. It's been on a pretty clear decline for the better part of a year and a half now. I continue on here and drifts lower and lower and lower. It does feel like it's going to miss expectations and feel a little bit lower, but you know, factory orders here, that bad. Another piece that's coming out tomorrow is the IBD tip economic optimism number. That has not been very optimistic, as you can see here, for the better part of a year, almost 2 years now. It's been well below that 50 mark, which is not good. Of course, this is just people's sentiment and how they feel about the markets, but all in all, not that big of a deal. The big news for tomorrow is going to be Canada coming out with their rate announcement. That is going to stay right where it's at 5%. Other than that, not much more to speak of. And I think we actually have a couple earnings announcements, but I didn't bring that. Bring up your earnings calendar. See you, Big Ab. Have a good night. All right. Well, it's got to be something from my stream, so I will check this and see. It's interesting because on the bottom of the software, it actually shows me if there's any issues. So I think it's this microphone. Probably just had this microphone for 4 years now. I use it every day, maybe up a little bit. So here's what we got cooking for Wednesday, and then I will order a new mic. It'll be here by the time I come back from Jamaica. So tomorrow we're going to have some choppy audio again, but hopefully next one we will have it all fixed. So here's what we got for September 6th. You've got GameStop reporting earnings, Dave & Buster's and American Eagle Outfitters. I, for one, am looking forward to GameStop's announcement. Like, what are they going to do? Going to make people think that they need to buy this stock. I am shocked that it's still trading at $19. Look at the daily here. Really surprising to me that it's still at $19. It bounced a few times off this $15.50 level. But it's GameStop, man. Not good. All right, that's going to do it for me. I'm going to run. Got a bunch of stuff to take care of tonight. Take the dog to the vet. I'm going to go and get some shots. And then trivia tonight. So if you're in Southern California, if you're bored, I have some good trivia rounds for. So anyway, I hope you guys all enjoyed today's show. Sorry for the audio and my absent-mindedness, apparently. I can't imagine. I'm not switching the screens. Wrong charts up there. Thank you. Back here today. No guests for tomorrow, so if you have something you want me to discuss, now's the chance. It's not going to get me for another week, so if there's something you want me to cover on tomorrow's show, let me know. Again, those who sent in questions, like Kevin and we had Scott and Joe, thank you for those questions. Bring it on in. If it's all, send them on in if you have anything else at TraderMerlin@gmail.com. All in all, is it a buying day? Well, I'm sold puts on several different things today. As I told you, I sold puts on IWM, XLV, and XLU. Just a couple trades, which means I am a buying day maybe. No sleep needed. I don't need, no, don't worry. I got somebody here to pick it up. Vacation mode, not yet, not yet. When I'm at that beach, you'll know. I might send a picture, just laugh at the outfit that. Anyway, have a fantastic remainder of your day, everybody. Comment down below YouTube for whatever you want the show topic to be for tomorrow. I will let you guys drive it. Just say, hey, I want the show to be about this. Put it down below the YouTube video or email me at TraderMerlin@gmail.com.